There is some good news in the market today, everyone. Inflation came in less than expected. CPI was just about 2.8%, which, like I said, is less than expected. Although, keep in mind, the US aims for about 2 to 3% inflation. 3%, anything above 3% is pretty worrisome. It's not like we're happy in this range. If it's not in this range, this is worrying. So we're still not great, but it's definitely not catastrophic right now, which is one thing the market's been worried about. Obviously, in the US economy, we've had rampant inflation for the last 4 or 5 years at this point. So with that being said, tech is doing well. There's a bit of a bounce. I own some stocks that are up 3-4+%. I know Tesla is up almost 8 or 9%, although it's been in an utter free fall from around 400. I think it was over 400. It's at about 260 even after the 8% bounce up. So what does this mean? Is everything hunky-dory? Well, this signals one thing to me. At least the market is certainly reacting this way, and I'm not surprised. It seems like if the bear market were to ensue, it will likely be a bear market. This is 97%. That's rather unfair considering the huge dip. Let's zoom out. That's a little bit more. That's a little bit more honest. You see, everything's going to look great for a couple days as we're in the lows during COVID, exactly 5 years ago on the 5-year chart. But that's a bit of a side note. The way the market is reacting, and I wouldn't be surprised if it was true. Not to say if tariffs are implemented, it won't cause any level of inflation, because it likely would, although it can be counteracted in other ways. I'm not here to talk economic policy too much, but it's important for this conversation. But it does seem to me, certainly when you see like the last month performance of Vici, the fact that it's down 1% today, almost exactly inversing the NASDAQ. There's almost been 100% correlation with like VEO and Vici. I covered in my video yesterday, but literally it was up about 9% yesterday. VOO was down about, or over the last month, it was up about 9%. Vici was, while the market was down 9%. This is telling me, for the most part, that if people expect a bear market, they're expecting inflation not to be rampant, at least rates not to be high like they were. Because if that's the case, people would be storing up cash to therefore buy CDs. Because if you can get CDs at 5 point whatever percent, why would you buy Vici? Have the risk if something went catastrophic, you lose it. So what does this actually mean? Does this mean we're going to go straight into a bear market again? Everything's just going to keep going up? I don't necessarily think that's the case. However, it is a shot in the arm for stocks, a nice boost today. It's some good news. People react, people overreact. People overreact to negative news. People overreact to good news. The market in the long term is going to find the value and ride it up. In the short term, there's a lot of things that it can miss, it can overlook, it can overreact. We see this all the time. We do. We see it when a stock drops 12%, the next day it's up 4%. It's called an overreaction. That's how it works. But does this mean that things are going to go great? Well, I think, like I said, I think it indicates that the market believes if we go into a bear market, it's not going to be a crazy high inflationary one. Not that inflation won't be high, but it doesn't think it'll be anywhere near where it was. They don't think rates are going to be raised a whole lot. That's how the market is reacting at this point. Whether that's true or not, we will see. What do I think is going to happen? I think there's one thing. I think in 2 months, right, like a 2-month period, we're going to have a very good idea of where we're going, because we're going to have a lot clearer picture. Maybe we won't. Maybe I could be wrong. I think there's probably a 75-80% chance we'll either A, be right back where we were, we'll be up, policies reverse, things go better than expected in the economy, whatever it may be. Or we're basically committed to the bear market. And bear markets can go flat. They don't just go straight down. It's not quite as crazy as a recession, usually, unless it's a recession as well, which is different. But just assuming it's a stagnant economy versus rapidly shrinking economy, we can go flat, but I think if the bear market is fully priced in, we'll be lower. Probably 10, 12, whatever percent lower. So I think the odds that we have a very good idea of where we're at in 2 to 3 months, I think that's very high. I could be wrong. I think there's a good chance. But like I said, who knows? What do I think? I think it's probably pretty much a coin flip at this point. I think if you know truly one way or another, I think that's okay, but I don't. I just don't, because At the same time, you could say, yeah, these policies are being implemented, perhaps are negative with the tariffs, whatever else it may be. But at the same time, just like how fast they were enacted, right? No one saw this coming until almost a month ago. Literally a month. I mean, there was a little bit when, they were delayed for a month. At the same time, literally the 20th, you wouldn't really be thinking anything. And then now we're down here. How easily they were implemented, they can be reversed just as fast. Keep that in mind. So if you had me bet, I would probably say in 2 to 3 to 4 months, we're probably back where we were. But at the same time, I'm not just throwing money into, stuff willy-nilly. So the way things line up for me, I'm probably going to be piling up cash for a month or two more. If things go down, I'm putting money in the market, into stocks, into tech, whatever it may be, because I don't mind riding the lows. I got plenty of time, got plenty of patience. I think I have a pretty good identifier of what stocks are good, what companies are good, which ones are strong enough to survive an economic downturn. And if things go up, I'm also putting money in the market, because better than timing something when it's down is just holding it for the long term, which is what I'm here to do. So that's all I really got for this, guys. Don't panic too much. Keep your mind, keep your head screwed on straight. I don't even know if that's a term or not, but I'm using it. So be cognizant, be aware. Don't panic too much about the day-to-day, but also understand what's going on so you know what best to do with your money. So anyways, this is all I got for you guys. I'll catch you next time.